Everybody, good afternoon. It's 4:08 p.m. here on Wednesday afternoon. I'm getting a notice that I've got a little bit of a lower connection to YouTube than I usually do, so hopefully things pick up here for you guys. What I'd like to do today is I'd like to take a look at the stock market. I'd like to take a look at crypto. Kind of give a couple of my thoughts on here before I get into any of it. Of course, as you all know, it's not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. As I go through here, feel free to leave a chat in here and let me know that you guys can hear me okay. I'm seeing some red and orange blinking lights over here, which usually isn't a good thing. So let me know if you guys can't hear me or anything like that. So I'm going to go ahead and keep on rolling. I'm starting here on Bitcoin. Uh, there is something a little concerning here that I do want to make sure that I point out. First off, we always keep an eye on our indicator, and I've just got the normal swing mode here on the indicator. Let me just go ahead and just kind of expand this a little bit. So the price has really just been moving sideways, right? And so we talk about this. It's just the price is really just kind of moving sideways, not really going anywhere. But what ends up happening is the indicator tends to reset. And so the indicator was moving up here, and that's not great. Okay, that's really not great for the indicator to completely reset and go into overbought conditions while the price really doesn't do anything but just move sideways. With that, let's go ahead and let's see here. Let's go ahead and move into a higher time frame here, realizing that we're starting to cross down on that 12-hour, which is not great. So I'm going to go here to a 4-hour, and I want to kind of zoom out and see kind of like where we're at. Do I think that the low is in? So the fear and greed in crypto is very, very low. It's one of the lowest that it's ever been. And because of that, I am very, very skeptical of severe moves to the downside. But I can't ignore the fact that we've got a couple things here that we really need to pay attention to. And it's this guy right here. I need to pay attention to that, which is very corrective, okay? When I talk about starting an Elliott wave theory chart, I always say, look for the corrections and go from there. So I'm just going to go ahead and just mark this off as a completed correction because it looks like that's a completed correction. We've got a nice little ABC to finish that wave. So from there, we move down after we were already moving down. So it means this correction was to continue to move to the downside. So how far do we have to go from there? Well, that's a really great question. That's a really great question. So what I want to focus on right here is this big move down, this pullback, and then this big move down here. Okay? So as you can see, I'm starting to kind of formulate a little bit of a correction for the time being. Now, with this, if we've got 3 waves down, 3 waves up, what we should be looking for is 3 waves down if it's a WXY, or 5 waves down if it's an ABC. But let's measure it, okay? So let's go ahead and measure it. We're going to take our trend base pivot extension tool, tag it to the top as close as we can. Doesn't have to be perfect. Tag it to the bottom here. So again, dominant pivot high, dominant pivot low, and let's get our pullback, okay? For a correction, what you would expect to see is a move to one of 3 targets for a correction. You want to see it move to the 618, which we went and we tagged. It tagged the 618. It did a really good job of it too, and it bounced off of it. Or down to the 100, which is all the way down here. Is it going to go down there? Chances are probably not. This price down here is all the way down at about 11,900. Okay, so let's make a small adjustment. I'm going to go on to log scale. Okay, so now things start to look a little different. Okay, now that we've got this on log scale, we have a 100% correction down here at about 23,000, about 22,950. That would make a whole lot of sense. Imagine all of the longs that would be liquidated, because what you're starting to see right now, you're starting to see a lot of people that are really interested in buying down here. Okay, you've got a lot of people that have been buying down here, creating liquidity, and it looks like we're starting to create a little bit of a bottom. But what I am afraid of, and I already started to mention this, okay, let's just go ahead and go back to the hourly, zoom right back in here. The fact of the matter is, we are moving sideways. And, I'm not going to talk too much about patterns here, but it does look like we've got a shoulder, we've got a head, and we've got a shoulder. It does look like we've got a little bit of that going on here. And if you wanted to put a neckline on it, you could totally throw a neckline on this. And we've broken down, we've already done a retest, basically. If you're a bear, this is what you want to take a look at. The other thing that you want to focus on is the fact that we could be seeing some redistribution on crypto. If we see a push down below about 29,000, 28,000, I'd be looking at this guy right here in particular. If we get a push down below that level, this is not great. That's at about 28,546. We don't want to see the price go down below that because that's going to be an indicator that a key level has been broken, which is a dominant pivot. Dominant pivots can turn into key levels. And if you've got key levels that get broken, chances are pretty good. So I've got a little bit of an echo. I got a message on that. Let me move my microphone a little bit. Hopefully that'll take care of the issue. So if we break down below a key level, chances are pretty good it's going to move to the next key level. And in this particular case, the next significant key level is going to be all the way down here at about 25,000. And if that breaks, then we've got significant problems ahead. Okay. Yeah, so I'm getting a message, a little bit of an echo, so maybe it's not coming from my mic. But anyway, I'm just going to keep on going here. So apologies if there's an echo. But at any rate, with this, just talking about that correction that we were just discussing, if we do break down below these levels here at about 25, I'm going to be looking for a move down here to 23, and I think this is going to be in line with what Elo, one of my partners, is also discussing as well. This also follows in line with a cluster of price acceptance, and that would be right here. Okay, so that level got lots of price acceptance. The next level is going to be right down here at about 19,220. Are we going to go down that low? Only time will tell, but there is tons of price acceptance here. If I threw volume profile on here, I would imagine we're probably going to see volume nodes down in this level. So I'm going to make just a couple modifications to this so that we can see this a little bit better. So let's do this. And so we've got to look at this. It actually lines up perfectly. So I'm going to pull this guy back here. So as you can see, throughout this entire bull run, starting in May of 2020, and I can pull this out just a little bit more. Actually, I can't. I'm as far back as I can go on a 6-hour time frame. Look at this high volume node here. It coincides with this 123.6 perfectly. And then look at this high volume node right here. It coincides with the 100% perfectly. Okay? This is important because the only time price was traded in these areas were as we were moving up. So there is tons of price acceptance at these two levels, which happen to be exactly at these two levels, which would be areas where we would expect there to be some demand. Okay, where are we looking at for our supply? Well, the supply happens to be, lots of supply is up above, right? And look at all these low volume nodes. It's going to be easy for market makers to push the price down into these demand areas. Okay, so there's going to be lots of demand down here at about 23,000 if we get there. Lots and lots of demand. I would venture to say there's going to be an extreme amount of demand if we get down below 20,000. Not saying that we're going to, but if you measure it and you're not on arithmetic scale, so I'm on log scale right now, you've got these two levels. If you go out of log scale and you go to arithmetic scale, we basically tagged that 1618 perfectly, but now look at the 100. The 100 is down here at about 12,000, but look at this volume node. It's even higher than these two. So we can see where there is acceptance areas of demand, both on log scale and on arithmetic scale. Okay, so you can see that we've got those levels there. So both on log scale and on arithmetic scale, you can see how and why we've got these important levels. And I wanted to make sure to point that out. Okay, apologies for that. I'm back. I'm having some major volume issues, major microphone issues with my machine today, so apologize for that. Okay, so at any rate, what I was saying is it would appear that once we get down to these liquidity areas, which are going to be at about 23, 24,000, I would say that we're going to be moving up to about 75K. I'm not going to be quick right now to say that we're going to move to 75K right now. I'm not going to say that we've created a bottom because fact of the matter is it doesn't look really bullish yet. Okay. Real-time Q&A, do it live. That's right. That's a great clip if you haven't seen it before. We're doing it live. All right. Anyway, so once we do get down here, assuming that we do, I would be really quick to say, yeah, we're going to turn around. We're probably going to start moving to the upside. I don't think we're going to get down to that 20,000 level. I don't think we're going to break down below there. But you know, things can happen. Things can adjust. Things can change, and you have to be able to adapt to that change. Otherwise, you're not going to make it in the market, right? I see a lot of people all the time ridicule people on Twitter that are like, yeah, I'm really bullish today. Then like 3 days from now, they're not bullish anymore. Well, you know what? Those are the people that are going to make it in the market because they're willing to change. They're willing to adapt to the market conditions that are presented to them. And that leads me into our good friend, the S&P 500. Okay? So the S&P 500 has been getting demolished today in particular. I mean, shoot, it was an absolutely atrocious day. We started at about 4,045 maybe, and we closed at 39.23. We basically had a 160 point drop from the close yesterday, which closed at almost 4,100. We're talking about like a major bull trap that basically just happened, and now people are getting shaken out of their positions. Well, what I am happy to say, going to the hourly time frame, what I'm very happy to say is we closed out of all of our equity positions yesterday at 10 o'clock in the morning. Let's go ahead and just kind of take a look at that. 10 o'clock in the morning yesterday. All right, that is going to be right. See, that would have been the 17th at about 10 o'clock in the morning, 7, 8, 9, 10. Roughly right here. I said, you need to dump all of your equity positions. Get out now. So we exited all of our equity positions yesterday because I had a feeling that something was going to happen today. So what did we do? We basically rode in Apple puts. We were in, let me go ahead and pull up the trade history that we had for today. We had some great trades. We were in QQQ puts. We were into the 298 puts. We actually made some money on AMD calls today because AMD actually was one of those guys that just was kind of going against the grain today. So we made money on AMD calls. We made money on the Qs. We made money on Apple. Those are the main guys that we were kind of trading today. And then, closer to the end of the day, I was looking at getting into some VIX calls for a couple weeks out. But at any rate,
this was a major trap yesterday. Now, do I think we're going to get a little bit of a rally? I think we're probably going to see a little bit of a rally. What I can say here is I'm on an hourly, and I've got the indicator set right here for the, for our swing mode, which is the default, which should be used on the hourly time frame. If you don't have access to the indicator, you can find all the information on bitdoctor.org to get access to the indicator. But right now, it looks to me like we're probably going to get a bounce here in the near future. Now, we're talking about key levels, okay? When we talk about key levels, I'm going to get rid of the volume profile here because it's not going to matter so much for what I'm about to go over. I'm going to go to a 4-hour time frame because I want to talk about key levels because, guys, I don't know enough people that put enough focus and enough attention on key levels, okay? If I just move this over here to the right, I'm going to take a look at all of these levels as we move up to our all-time highs. So all-time highs right there at 4,800. Let's just talk really quickly about key levels. Let's just go ahead and put them in here and just see how it coincides with the price action as we fall into those levels. What happens when we hit those levels? All right, well, first off, this cluster right here, I'm going to put a key level. I'm going to put it right here. Okay? I'm going to put another one right here. We had resistance here, then resistance here, then resistance here, a little bit of resistance, then we rip through it. We're going to have another key level. It's going to be about right here. I'm going to put another key level. It's going to be about right here. Okay? Then we're going to move down. I have a key level that's going to be right here. Now this is on ES futures. So this is the S&P 500 futures. Okay? I'm going to put another level there. And then right here, there's going to be another significant level. Okay? So let's just see how these levels coincide as we move down into a major correction. You can all agree with me. This is a major correction. Yeah? All right. Well, let's go ahead and scoot forward and see how price action has been respected at these levels. Okay? Well, right here. Perfect. The first time we come down here, we capitulate into this level, which was a major level going up as resistance. So we had a nice bounce off of that level into support. Okay? We come down, we hit the next level, and then we hit it again. Okay? What's going to happen the next time we hit that level? It's going to break. Okay? So, we kind of move up. We have a major move up. We see some support at these same levels. We see some resistance at these levels. The levels are very, very important. And I can't emphasize enough, when one level gets broken, you're going to move to the next level. Right now, we're not in good shape. We're really not. We're not in good shape right now. If we go down a little bit lower, I've got a level right there. Let's see if we can find some more levels to the downside. There's going to be one there, another level right here, and then we're going to have a major level. It's going to be about right there. So those are my next levels to the downside. Are we going to see prices go down that low? I mean, maybe. Maybe. If we're going to be bullish, we need to be bullish from here, okay? If we're going to be bullish, we have to be bullish from here. Because if we look at this from an Elliott wave perspective, okay, let's just go ahead and take a look at this from this high right here, okay? If we're going to take a look at this from Elliott wave perspective, from here, 1, 2, 3, 4, 5, A, B, C into the 2, and then we've got the 3, big expansion here into the 4, and then we got to be ending the 5 here. We have to. Right, this has to be the end. So let me go ahead and, just take a look at this. When we got the bottom, does it look like we have a clean impulse off of this? I would venture to say we don't have a clean impulse after this. The reason why I say that we have to turn around now is because, first off, we're not really at an important level, and it looks like we're going to continue breaking down. The next thing, too, and Ella brought this up at the open today, right? He was talking about this exact thing. Let's go ahead and measure this. The 618, we flew right through it. We flew through the 618, and it doesn't look great. It doesn't look great. Where's the 887 and the 786? So there's the 786. Let me get the 887 on here as well. These are all fib levels. We're sitting on the 786 right now. We have to turn around and move up now. Otherwise, it is going to continue moving to the downside. Okay? And I'd be looking for maybe a move to maybe the 1.382 extension to the downside as well. So let's go ahead and mark this in here. 1.382. Where does that level coincide at? The 1.382 is right there at 37.70, which happens to be at a key level. There is no coincidence here, guys. No coincidence that the 1382 is at 37.70, which is at the key level of 37.74, which I outlined for you all the way back here. And where was this brought up from? It was brought up from this resistance, this support. We had a little bit of resistance here, and you can see that we consolidated inside of these two levels here. Resistance, support, resistance, support. We broke through, we came down, and then we finally went up. This level right here is going to be important at 37.74. Watch it. Watch it, because this is going to be approximately 37.80 to 37.85 on SPX, which means likely we're going to move down to 3800. And we're probably going to try and push down a little bit lower, catch some stops before we turn around and move to the upside. There is going to be a big move to the upside, but right now it doesn't look all that great. Equity is your safest bet right now. Be very careful playing options, and if you are playing options, you need to be very careful on how you do that, because it can be very, very easy for you to lose a lot of money, and nobody wants to lose money in this market. Okay? Be very careful being late to the put game. When I play options, and if you're interested in how I play options, you need to find my free educational material on BitDoctor.org. There's a link to go to my Teachable site where I teach you everything that I do and get you prepared for being inside of our trading group. When I play options, I will play until it doesn't work anymore. We were short on TLT for 2 months. And eventually we got out of it. And well, it's a good thing, because it moved from like 113. It's at 117 in aftermarket hours right now. And the same thing with Apple. Apple has not been doing great, but we've been short on Apple already. Yeah, I added to my Apple position after I closed other winning positions. And at some point, it's not going to work anymore, but you have to play it while it works, and you can't be late to the game. That's called FOMO. And you guys, you're not going to succeed in this market if you operate on FOMO. You've got to be willing to take the risk to take a trade and have a hypothesis and have a trade set up and believe in your trade and let it play out. Because I see so many people that take a trade and then they go down like 10% and they're like, oh man, I'm out. And then what ends up happening, they look at that trade 3 or 4 days later. You know what, man, I was right. You got to have the discipline and the confidence in yourself to be able to take these trades. Heck, people say that, you shouldn't be doing any trading on paper. You know what? Whoever says that you shouldn't be doing paper trading and it's a waste of time, don't listen to them, because it is worth your time. Because fact of the matter is, it's different when you trade your money. But it's also okay for you to lose everything on a paper account than it is for you to lose everything in your own bank account. There's nothing wrong with trading on paper to figure out your strategy, to figure out your edge, to understand how you need to trade to be profitable. Once you figure that out, start trading with real money. Don't go big. Trade with one contract. Just keep it simple. All right, so this is my thought here on the S&P 500. If we don't turn around literally right now, we're right here at the 786. I suppose there's going to be a little support down here at the 887, but more often than not, once you pass through that golden zone, once you pass through the 618, once you pass through the 65, and you don't find support at that 786, it is going to keep on going. So be very careful with that. Next, let's see here. Let me go back into the insured chat, make sure that everybody can still hear me. All right, cool. The next thing is NQ. Nasdaq has been more bearish than the S&P throughout this entire time. And again, the indicator shows there could be a little bit of upside. But again, looking at this, our 12-hour, which NQ is not a 24/7 asset, but it's almost. It's like a 23/7 or 23/6 roughly asset, right? It doesn't trade on Saturday, and it doesn't trade most of the day on Sunday. But it's enough that I'm willing to call this the 12-hour indicator. So the 12-hour, which is the red, again, it has reset and it's starting to contract. This tells me that we're probably not looking super bullish right now. Okay? We're still short on Apple because this just doesn't look super bullish. You can't tell me that this looks bullish. Again, 10 o'clock yesterday morning. Get out of your trades. Right here. Get out. Get out of your trades. And today, we got in, I think it was like 230, something along those lines. It is just the waterfall. That's what's happening here. I had a question, what happened? What happened? I assume you're asking about what happened to the market. Well, the fact of the matter is we are in a complex correction. And if I go to a 4-hour time frame, okay, and I zoom out a little bit, and I start here at the very, very top. Now, Nasdaq looks much different than the S&P 500. From up here, it's easy for me to be very bearish. 1, 2, and then we move all the way down here to the 3, 4, 5. Okay, so we've got 5 waves down, and again, this is on Nasdaq futures. This is not NDX. This is NQ futures. Easy for me to count a 5-wave structure down. We do not have a situation where wave 4 goes into the territory of wave 1. This is a valid LE wave structure. From there, what do we have? We've got a nice correction from here. And in futures, it did kind of expand to the downside, but ultimately, nice correction. Where did that land? Where did that correction actually land? And I am on log scale. Look at this. It tagged the 618 perfectly. And if you recall, I was just talking about this in the opposite terms, where we were talking about the S&P moving down past the 618 and it's going to go lower. Well, what I'm saying is this is what we need to happen in the opposite for the S&P 500 right now. Okay, this rejected at the 618. This is a reversal point, and it just fell off the cliff. The target for that was 12,281. I talk about this all the time. If you see a 618 rejection, its target is the negative 236 extension. That is simple facts. You're going to see that trade win more often than not. I'd be willing to say that you're going to have more than a 50% win-loss ratio on that kind of a trade. I love those trades. They're my favorite trades to take. That's why I say that I am a corrective trader, because I look for that kind of stuff. My eyes and my brain gravitates to trades just like that. So at any rate, we've got 5 waves down, 3 waves up. Well, what do we have from there? Again, it doesn't look great, you guys. It really doesn't. From up here, 1, 2, 3, 4, 5. So 5, so 1, 2. Okay, then we've got to move down here to the 3. Again, a nice little 1, 2, 3, 4, 5 into the 3, A, B, C into the 4. No violation of wave 4 going into wave 1. And then we go down here into wave 5. Okay, so let me just go ahead and try and match these guys up a little bit so that it looks the same, so that you can see that the degree that I'm talking about here is identical, right? So all of these are identical in terms of the wave structure. But this is very, very deep. This is not as deep. So again, let's just talk about this. How deep did we go compared to that first corrective move down? So we've got dominant pivot high, dominant pivot low. We'll get the pullback. We hit the 100. We went a little bit beyond it, and now we're hitting the 100 again. The next target to the downside is going to be this 1, 2, 3, 6. For a corrective move, the 3 targets, when I was talking about the S&P, when I was talking about Bitcoin, I was talking about 3 targets, and I only talked about 2. I only talked about the 618, and I only talked about the 100. I didn't talk about the 123.6. If it hits that 123.6, which is at 11,200, roughly, 11,188.75 is really where it's at. If it hits that level, I would expect a significant move to the upside, okay? So are we going to actually be looking at this as a bit of an extension, and like an extended third? It's possible. It's possible. It doesn't look great right now. It really doesn't. And again, I mentioned that Nasdaq is not as bullish, and it has not been as bullish as the S&P 500. When the S&P 500 made its last all-time high, Nasdaq was not. Nasdaq was not. So where are we at right now in terms of a fib retracement? Dominant pivot low, dominant pivot high. We are at the 786 on Nasdaq as well. So both ES futures and NQ futures are at the 786 at the same time. Am I bearish? Are you talking about me, or are you talking? Oh, so Jim Cramer is bearish. So just due to the fact that Jim Cramer is bearish, it's probably going to turn around and rip to the upside. But if we do, it's got to be now. It's got to be now. It's got to be in the next 4 hours. Again, this is 4:30 p.m. on Wednesday, May 18th, 2022. If we're going to be bullish, and that's a big, big if. We have to turn around now. Yes, we bought some equity. I think we bought like 5 or 6 different stocks today. We diversified. We set our position sizes appropriately. We set our stop losses. So if it goes against us, we don't really lose a whole lot. That's how I play equity. I don't like to lose a lot on my equity plays because I put a lot more capital in my equity plays than I do in my options plays. But, that's a topic for another day. If we're going to turn around, we need to do it now. And if we do start turning around, we need to start breaking through some of these levels, okay? I talked about levels for ES. If we're going to start breaking through levels to the upside, going back to the S&P, ES has to get above 39.54. Then it's got to get above 40.33. If we can take out 2 key levels, I will take my bear glasses off and I will be riding blissfully to the sunset in my equity positions and some of the longer term leaps that we're in. But for right now, it really doesn't look great short term. A lot is going to happen between now and Friday. This is OPEX week, which is typically a little more volatile. Some weeks are not, but in most of 2020, OPEX did coincide with major lows in the market. Okay, I'm not going to pull up the charts. I'm not going to show this to you right now. Maybe I'll save that for another video because I've already been talking for half an hour here. But OPEX weeks have been blatantly obvious in 2020 and 2021 that those were major bottoms. Okay, so it's very possible that we do create a bit of a bottom this week before we start moving to the upside, even if it's just a continued part of the correction. One more thing that I do want to point out before I close it off here. When you're in a bear market, and this is actually going to be kind of funny. When you're in a bear market, usually the people that lose the most money are bears. And why do you suppose that is? Could be high leverage, but most of the time it's because they're late to the party. I've already talked about this, so I'm just going to kind of hammer it home here. If you're late to the party, you are more than likely going to lose. Okay, if you are in my trading group and you're watching me take all of these trades and we're making tons and tons of profits on certain trades, and then you see me take another trade, you're like, man, he's been on fire. This is the trade I'm going to take. That might be the one that loses because of what I just said. You have to be an all or nothing kind of person. Don't wait until later in the day, because the fact of the matter is volatility is at the very beginning of the day. And it could continue through the day, but it may just stop. Okay? It may just stop. The volatility may just stop. We may have a 100-point move on the S&P 500 in the first 30 minutes of the trading session, and then it may just move sideways for the rest of the day. Okay? So I might make, 2, 3, 400% profit in the first 30 minutes of the day, and then I might roll to a different strike thinking it's going to continue, and that's when it doesn't. So be careful being late to the game. Be on the ball at the open because that's where the volatility is. All right, guys, I am going to go ahead and end it here. This has been so much fun. I really, really appreciate you guys watching. We had a lot of engagement on the video today, and I do appreciate that. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. If you need access to our trading room, you get access to all of my trades. You get access to equity. You get access to options, verticals, leaps. We do crypto trades, lots of spreads. You can find all that information on BitDoctor.org. And of course, there is free educational material. If you go to BitDoctor.org, you'll find information on how to get to the Teachable site where we talk about, how we trade. So you can be prepared to enter into our trading room before you even get there. You can learn how we trade before you get in there, so you can just basically, jump right in, and you can profit from that on day one and not have to go through a steep learning curve. Okay, guys. This has been fun, but last but not least, there's one more thing that I got to say to you guys. Wherever you are in the world, hope you're having a good day, good night, and a good evening. Take care, everyone.